After seeing some tremendous growth during 2023, the stock market has now reached its all-time high, but the positive news is that there are still many great companies that are currently trading at discount right now. So today, you'll find 4 of the best stocks that you can buy right now during the month of February 2024. Without further ado, let's take a look at my pick number 1. The first company on my list is the electric vehicle company Tesla with the ticker TSLA. Elon Musk companies has had a pretty rough beginning of the year where the company's value is down by more than 20% during the first month of 2024. But in fact, this decrease that was caused by many important factors could represent an excellent investing opportunities for many investors that have missed the Tesla boat in 2020. But first, before to invest in Tesla, you need to understand what happened recently that have made them lost a lot of their total value. In fact, the most important reason why the stock is down since the beginning of the year is because of their more recent earnings report, where we've actually seen that the results were quite deceiving and where we've seen that during the reports of the earnings, the stock has been down of about 12% during that day. Indeed, we've seen that this automaker company has missed both the EPS and the revenue prediction from Wall Street during that day, despite being able to grow their total quarterly revenue to about $21.6 billion during the last quarter, which represent an increase year over year of about 1%. However, one of the biggest concerns for the investors came after the company released a statement saying that the total volume growth of the Tesla cars should be potentially lower compared to last year. When you combine these bad news with the cut price of the different cars of Tesla that has been announced last year to make those cars more affordable, you can understand that many investors see these news with some pretty bad eye. Nevertheless, the bright spot for this company is that over the last 5 years, they've been able to establish themselves as a leader in this EV market, notably by selling different cars that are ranging from between $40,000 to over $100,000 per car, from the Tesla Model 3 to the Tesla Model X and Y. Add to this, even if we've seen a slight decrease of the total production and deliveries of new cars lately, they are still able to produce way more cars compared to what they were doing a few years ago, where they currently are producing over 400,000 new vehicles per quarter. So just imagine what will happen when the company is going to be able to produce over 1 million new cars per quarter. It will obviously make the company's value explode. Plus, when we see that the company's value is sitting far from its all-time high of 2021 to about $500 billion at the moment, well, if the company's value is able to reach over $1 trillion, it will help you to gain over 50% on your investment if you would invest at the current moment. Plus, with the analyst prediction of Tesla current value that is at about $225 per share, this would present an upside of about 20%. So this overreaction of the market could represent a potential great entry door for many investors that are looking and that are believing in this EV company to be the number 1 in the future. Now jumping out to the second pick on my list, which is Airbnb with the ticker Airbnb. This vacation rental company has become an interesting choice for many travelers over the last couple of years, where they can make short-term renting of someone else's property while they are away. So this business model represents an excellent alternative to the classical hotels for people that are looking for more unique and exclusive way of traveling with more different facilities, because obviously by traveling with Airbnb you have way more options that you could have at an hotel. Add to this, Airbnb could be a cheaper option for you if you're a group of people looking to stay at the same place for a lot of different days, and if you're not looking to buy multiple hotel rooms. And it is notably the reason why we've seen that this company has blown up over the last 5 years, where their total revenue have grew on average by over 15% per year. Add to this, we've seen some significant increase in the night stay in 2021, where this number has reached over 356 million nights per year, which has represented an increase of over 42%. All of this makes that there are currently over 4 million hosts all around the world while having over 6 million listings, which has helped the company to grow massively its value over the last couple of years, where its total valuation is currently sitting shy from $100 billion at the moment. And an important fact to know about the business is that despite being a well-known name in the vacation field, it still has a lot of room for growth over the next couple of years to reach the point that it was before the pandemic. In fact, when we see the total revenue growth of this business over the last 5 years, we can see that they've been able to reach on average at least between 15 to 20% of growth, which is showing that the company is still in full expansion at the moment. And when you combine this with some excellent price to earnings ratio of less than 20, some excellent debt to equity ratio of about 25%, and some tremendously great profit and operating margin, we can understand that this company could be some interesting pick for many investors. Now jumping out to the third pick on my list, which is the largest pharmaceutical company in the world, which is Johnson & Johnson with the ticker J&J. This business that currently worth over $350 billion is worldwide known for their star products such as Tylenol, Band-Aid, and Johnson & Johnson baby products. The excellent news that we received about this company lately came out at the end of January, where we've seen that the company has been able to outperform the prediction of the analyst when it comes to the total revenue and the total EPS. And that's not all. The company is also forecasting some excellent growth in their total sales for 2024 that should grow from $87.8 billion to $88.6 billion, and with some adjusted earnings of $10.55 up to $10.75 per share. And so the least that we can say is that they are off to a great start, where their total sales in the last 3 months of 2023 are up by about 7.3% compared to the last 3 months of 2022. One of the most important branches that have helped them to have some great success on the financial side is in terms of the medical devices that have been able to generate some sales of about $7.67 billion, which is actually up by about 13.3% compared to the same quarter last year. And just for a comparison, Wall Street was expecting this branch to generate some sales of about $7.50 billion during the last quarter. So this company that is currently down by about 4% over the last 12 months could represent a great buying opportunity for many investors, especially for the ones that are looking to earn the next dividend of the company that should come out on the next ex-dividend date of the 16th February 2024. Finally, the last pick on my list for the best stocks to buy in February 2024 is the company Humana with the ticker HUM. This American insurance company that currently worth about $40 billion has seen some important decrease in their total valuation lately following their earnings report. Indeed, despite being able to reach some incredible quarterly revenue growth of about 17.9% over the last quarter, which make their total quarterly revenue reach over $26.42 billion, beating the expectations predicted to about $25.6 billion. Well, they've had some atrocious results in terms of their earnings per share, where they've seen some losses of about 11 cents per share during the last quarter, and this was way below the analyst predictions for the last quarter that was about 92 cents per share. And so to justify these poor earnings results, we've seen that the board of managers of Humana has said that these were linked to higher costs in terms of medical equipment for 2023 and 2024, but the company has also said that these trends were coming from an industry-wide phenomenon and that they don't change the long-term attractiveness of the insurance sector. In fact, Humana operates in the insurance fields that should continue to see some great growth in their total value over the next couple of years. On their side, they are notably offering their special Humana Medicare Advantage, which includes dental, vision, and hearing benefits accessible for their clients. But what is particularly interesting for the investors about this business is that they've still been able to continuously increase their total revenue year after year. However, it is clear to me that the management of this business will need to find clear solutions to increase the total profitability of this business. But since the stock is currently down by about 20% since the beginning of the year, and with a price to earnings ratio of less than 20 and a price to sales ratio of about 1, this could represent a potential high risk, high reward play for many investors that are looking to invest in this type of company. So there you have it. Those are 4 of the most undervalued companies that are currently available on the stock market. There are obviously other great choices on the market, but with the year that we've seen in 2023 and that we are currently seeing at the beginning of 2024, it has become quite harder for individual investors to find what are the most undervalued companies. It is why if you're starting to invest, I personally believe that the best option for you would be to buy a solid portfolio based on great long-term ETFs. And so to find what are the best ETFs that could suit perfectly in your portfolio, check out the video that's going to be right over here, and I will see you soon. Peace!